Hi, and welcome to yet another episode of Digital Success Exchange. We have with us today Robin Smith, Regional Vice President, Sales, North America of Mambu. With more than 30 years of experience, Robin has successfully built national and international teams for software, professional services, and business process outsourcing to the financial services industry. We also have with us Shavik Chakri, Business Head of INT, and he will be taking the discussion ahead today. Very interesting topic today. We are going to discuss how embedded finance is changing transaction banking. Over to you, Shabik, but before we begin, here's a short introductory video.
Thank you, Ashmita. Hey, good morning, Ravin. I hope you are doing well.
Good morning, Savik. Same to you. Hope you're doing well.
Robin, before we jump into our onto a bunch of technical question, I would love if you can just talk a little bit about your long experience in the industry, how you have seen the industry has been changing from that ledger-based banking transaction to nowadays digitized transaction, and how Mambu has been helping to this change in this ecosystem. I'm sure it would be it will be great to hear from you about your 30 years of experience in the industry.
Thanks, Savik. I really appreciate the question. I like to say I was fintech before fintech was cool. That I've been working in the fintech space for the last 30 plus years. Started off with all good things in terms of mainframe computing and providing financial institutions with software and services, in the olden days, and then have seen the progression, of the technology over the last 30 years from that environment to today's cloud environment. And one of the reasons why I'm excited to still be in the industry today and still be working with a company like Mambu is the opportunities that cloud-based computing within fintech provides, not just for financial institutions but for the consumers that take advantage of financial institutions. Right, there's a great marriage between the technology and the consumer, be it a business or a consumer today, that's able to take advantage of cloud-based technologies, to improve their lives. From the unbanked and underbanked that have access to the financial system, to the most sophisticated corporates. There are all kinds of opportunities, to leverage today's technology in very different ways, than have been done in the past 30 years. So very exciting times.
That's an experience speaking, actually. Really appreciate that answer. Now, coming to today's session, we are talking about embedded financing changing transactional banking. Now, I'm sure a lot of our audience who is looking at this webinar live and in future recorded content, and they would like to understand what exactly embedded finance is and how it is changing the fintechs or the transactional banking or day-to-day days event in this domain. If you can just throw some light on that.
Well, sure. If I understand the question, Sovik, kind of what is embedded finance? I laugh at that sometimes because we toss it around today as a fancy buzzword for really a lot of things that we've been doing for a long time. So when I think about, for years, you've been able to go through your cable TV provider, order a movie, order an on-demand type of activity, have the charge show up on your bill a month later for $19.95 or whatever the movie cost was. And so as part of your entertainment experience, finance was embedded in that. Or you think about the Easy Pass that I have in my car that allows me to go through the toll booths, that surround Central Florida. It takes out all the friction, right? I don't have to go through the booth anymore. I don't have to find quarters in my car, in between the seats, because I get an automatic bill automatically debited to my checking account, once a month for, my toll activities. So I really think embedded finance has been a part of our lives for a long time. I think what's happened is that the concept's not new, But as the technology has advanced and technology has grown, it's greatly expanded, right? It's greatly expanded in terms of what you're capable to do when you start thinking about embedding finance into your day-to-day life. So it's not just a spending activity anymore, but it's everything from investing to saving to borrowing to moving money between you and I. If we go to lunch together and I want to Venmo you, half of the lunch bill, I can do that. It's exchanging value, right? So it's all the things that surround the way we conduct our lives, and embedding some aspect of financial services in them. And I would contend that if you don't have embedded finance in your, offerings or in your outlook, whether you're a traditional bank, whether you're a fintech, whether you're a non-bank, a commercial organization, then you're at great risk of being disintermediated by other providers, right? Other people that are meeting the consumer demands in that regard. And so it's particularly important when you start thinking about millennials, Gen Zs, the people that are quite a bit younger than you and I, that are out there in the marketplace, right? How are you going to meet them and meet their expectations to do business that way? Does that make sense?
Yeah, of course, of course. I think very interesting data point that you have pointed out that more companies and new banks and fintech companies are going to the embedded finance in their offering. But does that mean that traditional bank doesn't have any role to play? Because there are, I'm sure, a huge chunk of traditional banks who underline the base and they have a very strong potential, who has been still doing business, large banks. Some of the banks have already adopted new age technologies, but what about the traditional others? What role they play?
I really appreciate the question. I'm a banker by background, and that's what I've grown up in, is providing technology to bankers. And have as the world has changed, I've had to change, right? I've had to get comfortable working with fintechs, working with non-traditional, financial institutions. But traditional banks, are consistently, when you look at consumer surveys, business surveys, one of the things that traditional banks always rank very high in is trust. There's a tremendous amount of trust with traditional banks. Where they fall short, and where they're challenged is in how they serve their customers, and the breadth of services that they provide their customers, and how frictionless they provide those services to their customers. So, while they're trusted entities, they fall down in the other areas in terms of providing that great customer experience. And a lot of that is because of their weaknesses in technology, the legacy technology that they're dependent on, and then how do they enable that technologies to support those kinds of customers. What they do have great strengths in, right, besides being trusted entities, they have great strengths in what I'd say are three categories. One is they have a treasure trove of data. They have more data on you and I as consumers or as businesses than virtually any other source in the world. In that they have all that critical financial transaction data, a lot of other data that they've had to collect for regulatory purposes, and so they have that data pool that they have available to them. They have open access to the financial system, right? They're probably the best connected to our ability to move money, not just domestically, but globally, right? So you're in India, I'm in the United States. We want to send money back and forth. Doing that through a traditional bank is very easy. Starting to do that through fintechs and other players is not quite as easy, right? There are challenges to that. There's regulatory issues, there's licenses, there's access to the rails. So that open access to the financial system is huge. I mean, you even look at latest in the news today that we're all shocked by in terms of the activities in Europe with Russia and the Ukraine. The number one sanction that we can have in place is to stop the financial system from working, and supporting Russia. So again, traditional banks play that role with access to the financial system. And then finally, the third area is traditional banks have a balance sheet, right? They have a balance sheet that they can drive activities from. You look at a lot of non-traditional financial institutions, they're dependent on the capital markets. They're dependent on securitizing a portfolio and gathering funds for capital, to make new loans. A bank has a built-in balance sheet that they can lend from. So I think if they can combine all these strengths, if they can, upgrade their legacy technologies, if they can, start to enable things like AI, machine learning, those types of things, then they really have an opportunity to, take embedded finance to the next level and create a real winning opportunity for a traditional bank.
So, Robin, I think that's a very good way to answer that problem. But I'm just curious to know, you just given an example of transferring money, right? So, I think we have grown up with whenever a bank transfer money from one bank to other, there's a Nostro account and there's a Vostro account where the money get transferred. And recently, we are thinking that people are talking about Ripple, which is a blockchain crypto where the money will get transferred. So, do you think that adoption is going to happen very soon, or is it going to take some time? And I'm sure the base system will be same. There's a base is not changing, but with one single click, what Western Union has done maybe 10 years back, where you go and there's no physical money transfer. You can just collect the money from a node and HubSpot model where you can collect the money. But with technologies like blockchain and Ripple and other XYZ, I'm sure things are moving to a different direction altogether, right?
Absolutely. There's no doubt that the movement towards digital currency and the exchange of digital currency, is on a very fast pace. And you see it not only from consumer and business adoption of starting to work with digital currencies, but also on a global basis as you start to see sovereign nations, create their own digital currencies, right? Create their own, currencies, to be able to participate in that exchange. You see it from Snoop Dogg, right? And NFTs and all the other things that are going on in that space. So there is a lot of activity around digital currencies and digital transaction and the movement of money through the digital, vehicles like blockchain. At the end of the day, that money still has to get converted into something that we can exchange, to buy groceries or to buy a car or to, participate in the rest of the economy. So I think, all of the institutions that surround the financial ecosystem can play in that space, but it's not an easy task, and it's something that I think is forefront with many bankers. I was speaking with one of the heads of one of the tier one banks not too long ago, who is based in the UK, and I asked him about crypto, digital assets, digital currency, in terms of were they comfortable with their strategies in that area. And his first comment was, "I think you overheard my conversation with our CEO last week when she asked me, what were we doing? Or were we prepared for it?" And he said, obviously, if she's asking me that question, she doesn't think we are. It's definitely top of mind for most financial institutions, but I think it's something that, you have to be aware of, as part of this overall ecosystem. And then where does it fit within the whole embedded finance, topic as well? Because they're all going to converge to where we have, again, ubiquity, just as you've seen with other technologies. As it matures, it'll become more mainstream, and I think that's when you'll see real adoption take place.
Right. I think I'll just add one more point. It's very interesting to see that it is a virtual currency, and what it has done is that in case you don't have the ecosystem, it has already created an ecosystem in Web 3.0, in metaverse world where NFT is there, where you can buy via block cryptos, exchange cryptos. So this is, I think, the future is really exciting, and I'm sure you will find another universe altogether where we can reside. Anyways, coming back to the embedded finance discussion, I think that's a different discussion, and we can go on and on and on.
Yeah.
Very
Yeah.
interesting topic, and we'll have one more mini session sometime in future. This talk coming to embedded finance thoughts. Just curious to understand that why embedded finance is something which is applies to retail customer, because we just now mentioned about customer in financial, there's retail and there's corporate, but this is where we are talking about only of the retail customers. What's your thought on that?
Yeah, it's a great observation, Salvik. When you think about it, it's really the law of numbers, right? That where most people get concentrated on embedded finance is because there's so many consumers in the world, that are taking advantage of financial solutions, in their lives, right? And there's just such a huge consumer population out there, so it kind of naturally drives you towards the retail use case, right? Because the retail use cases is what drives volume. Volume drives transactions. Volume drives fees. Volume buys, drives money. But there's no logical technical reason to not think of including embedded finance offerings in B2B activities, right? From enabling frictionless movement of money to faster movement of money to direct B2B exchanges of money. And then you start thinking about trade credit, receivables credit, trade finance type activities, small business lending. All of those things there's a place for embedded finance in all of those things. And I think more and more you start to see people, especially traditional financial institutions, waking up to that the real potential for B2B type of embedded finance activities is huge, both as a benefit to the business as well as to the bank.
Right. So, just curious to understand that embedded finance is definitely where future is moving on, and with neobanking and challenger banking and even traditional banking coming into this, how do you foresee that the banking solutions will be digitally adopted and will have a seamless banking experience using embedded finance?
Can you clarify the question a little bit?
Yes, embedded finance transaction banking solutions enables a bank to provide a similar digital transformation. And out of that, we have found that traditional banking is moving towards your into digital banking space. And we also found new forms of banking, that is neobank, challenger banks, which has come up in top of the primary traditional banks. So what's your view on that?
When I think about that question, or kind of the fundamentals of that question, you have to kind of look at what's driving the adoption of embedded finance, right? Regardless of what type of financial institution you are or provider you are, what is driving that and why is that happening, right? And the why goes back to what we were talking about before, the use cases, right? Whether you're a millennial, a Gen Z, heck, if you're my 92-year-old mother, right? You're expecting an experience, right? That includes some financial component to it when you start to interact with various institutions. And so the consumer expectation, is so high that process needs to be easy, that I think that regardless of what kind of business you are, again, if you're not enabling some form of financial exchange as part of your offerings, then you're really at risk of being, out of business, in some short period of time. We've seen, examples of that for years, of people that had a great product. You go back into the early 90s and you look at, whether it's BlackBerry or Palm or one of the other, vehicles that we used for exchanging simple messages with each other. Within a very short period of time, that technology was eclipsed by the iPhone and by smartphones, right? So I think embedded finance kind of takes you down that same path, is that you're going to be required to include embedded finance in your overall, thought process and in your vision. And if you don't, you're going to be disintermediated. I don't know if that helps answer your question, but I think it's definitely the path that we're on.
Perfect, perfect. Moving to my next area, I think we just spoke about the retail customer. I think let's talk about the corporate also. So even I think that's a significant amount of banks' numbers come from the corporate customers. So how important it is for banks to deepen the value of the corporate relation by delivering game-changing transaction experience?
Boy, I love the question because, every time I talk to, a financial institution, globally as well as in the United States, the number one thing that they are, one of the number one priorities they have is their business banking arena, right? Whether that's corporates, whether that's small business, that's the area that they always have as one of their top priorities, particularly in the rate environment we've been living in. with the variety of consumer solutions that are out there, where they drive non-interest margin from, where they drive fee income from, where they drive stickiness of solutions is all around their business banking type components, right? Around their corporate banking, business banking type activities. And so, that is the area that, once they secure that client, that client will stay with them through thick and thin, through good and bad, because how difficult it is to replace your corporate bank or to replace your business relationship. Now, that said, when you talk to small businesses, one of their biggest frustrations, comes down to when they need money, right? When they need a small business loan, when they need an operating working capital loan, when they need some, service from their bank in the credit area, how long it takes, how slow it is, how complicated the approval process is, how complicated the application process is. All of those things are what they're challenged with, and that's what frustrates them. And that's why you see gravitation towards the lending clubs, the Cabbages, the other non-bank lenders, is because they've been able to meet that demand of timeliness, frictionless access, to credit. So I think when banks can look at embedding finance in their business offerings, right, they accomplish multiple things. One is the financial side of it, right? They secure a relationship that's very sticky. They secure a relationship that drives fees and non-interest margin, and they secure a client for life. And normally it starts from the credit side. So my counsel to banks is look at your credit process around small business, around medium-sized corporates. Are you making it easy for them to do business with you? Are you making access to it quick and easy? Because once you secure that credit relationship, the other stuff will come. You'll get the deposit relationships. You'll get the tangential relationships with friends and family. And the best way to do that is through digital channels and through embedding finance, in the electronic engagement that you have with those customers.
Right, very well said, Robin. I really appreciate that. I think now let us focus a little bit in the focus in the area of banking as a service banks. To meet the rising demand of embedded finance, financial institutes are offering banking as a service, and you cannot deny the fact of BaaS is imperative. What's your view on that?
Uh, I would agree with you, Selvik. I think that what is banking as a service, right, is where you start with in terms of that, and where does it fit within the overall landscape that we're working with. So again, banks have this. We talked about it early on, the unique advantage they have of access to the financial systems and ease of access, to the overall financial system, and their ability to then use API technology, to use open technology to provide access not just to their customers, but to their customers, right? Their ability to enable, a business, right? If I'm running a bodega, if I'm running a, pet care, company, and I want to be able to offer you, a payment plan for the $2,000 surgery that you had done on your pet. Their ability to enable those types of transactions, right? To offer that piece of banking that we think of as a traditional banking service, to offer that to their customers, who can then turn around and offer that same thing, to the end consumer. That's really banking as a service to me. It's opening up, that suite of things that a bank does, right? Or that any financial institution does, such as a credit union. It's opening up that suite of services and that suite of capabilities, and enabling other people to use that and to grow and advance their businesses. So I think it's definitely an imperative. I think, unfortunately, again, it's one of those things where the state of a lot of the legacy technology, makes it very difficult for a bank to do that.
Right. So when we talk about BaaS, banking as a service, it's actually a distribution of lots of APIs, which requires a very strong compliance management with the embedded finance partner, right? And these are primarily hosted in clouds, right? So I'm just trying to understand what type of risk and the compliance one should be looking for in such cases? If I really wanted to go for a BaaS based, and do you also agree that cloud banking is something which is transforming the banking industry?
Yeah. It yeah. When you start talking regulatory, right? You're talking about within banking or within financial services, probably the most highly regulated business in the world, right?
Right.
It is the most highly regulated industry, that's out there. And that's a double-edged sword, right? Bankers hate regulation, right? Financial institutions hate the regulation, but think about it also as a strength that they have in the area that you're describing, right? So they are able to, wrapper everything they do with a regulatory lens on it, right? So that they will be able to offer banking as a service, offer the open APIs with a regulatory first type of viewpoint, right? So that if you're engaged with, a financial institution, a regulated financial institution, and you're working with them to, receive that banking as a service type capability, um, working with them on things like know your customer, anti-money laundering, fraud. Uh, they're on top of that. They are the ones that are the tip of the spear in terms of those types of activities. And so, as a consumer of banking as a service, right, through those open APIs, if I leverage that, I get the waterfall effect, right? I get the waterfall effect of working with a highly regulated institution that's monitoring those things on a regular basis, that has the tools and the capabilities in place to be compliant, and I can basically become compliant through that relationship that I have with the financial institution. So I think there's definitely a strength they have, particularly when it comes to offering banking as a service, because they've been having to, they have the longest history of meeting the regulatory compliance problem.
Right. And what about the transformation of the bank in cloud environment?
In terms of moving to the cloud and banks moving to that type of delivery model.
Yes, yes, because when you're talking about a bank BaaS as banking as a service with a lot of APIs getting hosted, I think cloud is one of the key criteria, right?
Yeah, absolutely. You can just watch. I mean, it's like Moore's law in terms of, year over year, the number of people that are embracing the cloud, is just, exponentially going up year over year. I mean, it wasn't but about 2 or 3 years ago that you had folks like Jamie Dimon at J.P. Morgan Chase, talking about never going to the cloud, right? And within the last 6 months, he's gone all in on cloud computing, right? So really, literally within a year to 2 year period of time, one of the icons of our industry, has embraced cloud computing. Yeah, and so you have to sit back and you have to say why, and it's a combination of things, from speed to market, ease of use, financially shifting from a capex model, and all of the balance sheet debt that you carry for data centers and IT environments to an OpEx model, right? So that you're able to, manage, but from a budgetary standpoint, easier. But I think, it's also then flexibility, right? The ability to use, right? So, we deal with corporations that operate globally, right? We deal with global financial institutions, that want to have, an operation in the UK, an operation in the United States, an operation in Japan. And there's different, data privacy requirements. There's different, issues that come up. And so the ability to, work with Azure in Japan, or work with AWS in the United States, or work with, Google in the UK, the ability to move between cloud providers and have that seamlessness, in terms of, fitting the environment to what you need in geography. And then I think there's just this exhaustive catalog of alternatives that you have. Again, I referenced, Palm and BlackBerry a little while ago in terms of what we've seen there. Think about the number of apps that you have available to you now on your iPhone or on your smartphone, on that catalog of applications. If you were starting a software company today, right, I don't think you develop it as an app. You develop it as an app. You develop it as a cloud-based solution, right? So that catalog continues to expand and continue. And so as you as a financial institution, a fintech, somebody that's looking at banking as a service, your ability to compose elements of that catalog, right? To go to that cloud catalog of financial services activities and compose a solution that's unique to what you're trying to accomplish in the market is unparalleled. And you couldn't do it if you weren't, in a cloud-based environment. So I think what we see is progressive institutions moving rapidly that way. We see that being the first discussion, not the last discussion, and it being really the priority of how we're going to run the business going forward.
Right, and I think you have rightly pointed out the areas that how clients are moving on, and when we talk about a number of transaction data which is going on, I think we are generating a huge amount of data, right? And most important is data is a new oil, right, for the new generation. And any conversation cannot stop without talking about data, right? So my next question will be that most of these new age fintech companies and new age banks, they are using data extensively for building, for say product recommendation, underwriting, intelligence, customer persona based products. So how do you foresee how this thing is going on with the data as in future?
uh, I am a data geek, right? I think data is the holy grail, right? I think data is the ultimate component that drives all of our activities, and I think that if you do some compare and contrast on usage of data to try and answer your question, right? So one of the companies that I'm engaged with right now is focused on enabling you know uh, students from India that are traveling to North America to attend university and that type of thing, but enabling them to where when the minute they land in New York or the minute they land on the West Coast, wherever they're coming in from, they have their cell phone activated. They have access to the financial system. They're able to receive and send money back home. And they're doing that. They're creating those opportunities by assessing data differently than what a traditional financial institution might look at. One of my colleagues from Romania moved to Miami, and it took him over a year to do something as basic as set up a checking account, buy a car, and get security for his apartment that he wanted to buy, right? Because of how difficult it was to engage in the traditional financial system and the traditional data that they look at. Think about if you're a cellular carrier, right? And I was having this conversation with an executive in Canada, which is in the top 10 of immigration points in the world. And so you're coming in from China, right? And you want to get engaged in the financial system. Well, the first thing you want to do is, if you can get that cell phone activated, get the SIM card, start offering them, access to the financial services environment via their telco relationship. You've just changed their lives, right? And you've expedited, what would normally be a long-term process. But you can do that because you can look at non-traditional data, right? So you start to look at the last year's worth of cell bills versus their FICO score or their credit score from a credit bureau, right? You start to look at the frequency with which they get paid. You start to look at other pieces of data that will drive different behaviors, right? Or allow you to make different kinds of decisions, whether it's an account opening decision, right? Just simply opening an account, are making a loan, right? There's so much data out there outside of what traditionally those decisions are made on. So I think that a focus on data, how do you action it, right? How do you use machine learning, AI, digital means to action that data, right? As opposed to just having those buckets of data and not doing anything with them.
Sure, right. I think with millions and trillions of data, we will soon find a lot of decisions will be automated. With a lot of decision will be RPA driven, and it is going to grow in future, and it is going to. So I think there's a huge positive impact that we're going to see, and embedded finance is not going to be stay back; is going to lead the path as well. Like this, I
Absolutely.
really appreciate your time, Robin. We have a couple of questions from a couple of audience. Do you want me to read those?
Sure. Be happy to.
All right. So first question is from Prasenjit. Prasenjit, thanks for joining us and thanks for asking the question. We always love interactive audience like you. His question is: does embedded finance overlook the reality of choice in the market? I mean, just because our customer doesn't have one facet of their business with a company does not necessarily means that they want to that company as a provider for everything, especially if the service is inferior to what they get elsewhere. Your thought on that, please.
If I interpret the question properly, it's you know that the whole issue of choice in where I'm choosing my financial services from, right? And I don't want to do it all with a bank. I don't want to do it all with a fintech. I want that ability to do business across multiple vehicles. Is that kind of what the question is?
Probably yes, it's a little bit something
So
like
I
that.
mean, a great that's where I think banks have a real challenge, right? That trust factor. If you go back to the issue of trust, um, my paycheck gets deposited to my bank because I trust them to receive the transaction via ACH, make the deposit to my current account, and my money's there, on time in my current account, available for me to transfer. Okay, available for me to use. Okay, one of the first things I do though is I move some money to my stash account, right, which is my robo investment account. I move some money with via Zelle, to my daughter's account. Okay, I'll move money to one of my investment accounts, right. My money market account with Fidelity charges me nothing, gives me all kinds of other benefits, right? So while the trusted source for that deposit is my traditional financial institution, I'm moving that money away from the financial institution to service other requirements. To the questioner's point, right? I don't want to do all my investments through the bank. I don't want to do my investments through that one vehicle, and that's where I think banks have to recognize that they may be the trusted source for origination of that activity, but they're at real risk of being disintermediated by all of these other choices that I have as a consumer or that a business has as a user of financial services. So I think my challenge would be banks need to think about that. How do they leverage what they are trusted for to where I don't want to do that? Or how do they give me those alternatives through banking as a service type offering? Okay, where they become the backside of the white label side of somebody else's work, and they still benefit from it. So I think it's definitely a great question. It's definitely, I think, something that whatever end of the spectrum you're on, you have to think about.
Sure. Thank you, Robin. We have one more question from Shelly Bhalla, and her question is actually very concerning and interesting as well. She says that non-banking, the NBFCs, which are not directly banks, take a lot of insights and user data from the banks and create new opportunities. Is our data safe enough with the banks? How safe, how secure it is?
So is the question, how safe is the data at the
Yeah,
bank?
the data. Yeah, because end of the day, when somebody, I think her question, I'll just rephrase the question. I think she's more concerned with this new banking, which is actually building their entire skill on top of an existing bank. New banking doesn't need to have a banking license to run its operation, right? But they operate on existing traditional bank or a digitized bank, an open banking platform. But me as a customer, I'm sharing my data with the new banking platform. So how safe is my data when I'm sharing the data with some new banking or a challenger banks?
I, uh, I think it's a great question, and it's one that as a consumer of digital financial services, you'd better take very seriously who you're doing business with, and vet them no differently than you would somebody you were going to leave your children with overnight. If you were going to hire a babysitter, you wouldn't just go down the street corner and hire somebody without doing any background check on them. And I think that that's one of the burdens, the risk burdens that shifts to the consumer and to the business is who are they doing business with from a
Mm.
financial services standpoint? Because again, banks have that trust factor in large part because they are highly regulated around all things information security, around all things around. Even though there've been incidents, right? They're the most regulated in that regard as well, and so they have the security and the protections in place. And I think that we have to look at that as consumers and also as providers. Are we giving our customers that same level of assurance and security controls over what we do? At Mambu, as an example, right, we have very, very strict and high standards around information security. We're a cloud provider, right? So we're in the public cloud. So we have to be conscious of that we have vulnerabilities in that regard. But then we're the provider of those solutions to financial institutions, so we have that fiduciary responsibility as well, to protect them in their use of our solutions. So I think if you're dealing with anybody in financial services, that's not a traditional bank, double click, so to speak, on that aspect of the way they do business. And if they don't have policies and procedures and guidelines on that, in their website, in their agreements and their documents, that ought to be a warning sign that maybe this is not somebody I want to do business with.
Thanks, Robin. I think I really appreciate that answer. And I think I'd like to add a little bit on Shelley, assuming you are from India, Shelley. So in India, Shelley, you will find a lot of startups has come up with new banking platform, payment process platforms. Well, I wouldn't say that all are fraud or all are fake, but yes, you need to be 100% sure. Check out the basic standard. There is something called PSI DSS certification. So if such companies need to store your personal data, your credit card data, they has to be PSI DSS certified. That's a mandate. And whenever they work with the major banks, they need to ensure that some of the standards and compliance are met. So, but there are fake applications, unlike any other countries or any other. But we take cautious decision. But we cannot avoid this change. This is what the future is going to be, and enjoy and be cautious, of course. I think we have one last question without the name, Robin. Will embedded finance be able to empower the poorer section of the society? Most probably the society, I'm thinking about the economically poor section of the society, leading to a great financial inclusivity in the future. I think what the question means is that maybe some of the people who are in lower angle of the economy might not able to go to the access to traditional large banks, right? So is this going to help us in future, that how the future is open and how the economy is changing? So I think this is what this person who is not mentioned his name is trying to ask.
No, absolutely. I believe that what has evolved over the last 10 years in terms of the parallel advancement of technology with the parallel progression of multiple financial services organizations and providers, that the opportunity to reach the underbanked, the unbanked, people who have not had equal access to the financial system has exponentially increased and will only continue to increase. And it starts and stops probably most evidently with that mobile device, right, with that smartphone, right, that virtually I read recently what the current estimated adoption rates were and usage rates were, and they're huge, right, in terms of global population and access to that device. That is the window to the underbanked, to the unbanked, right, is that digital enablement. When you look at what Google's doing with satellite placements to serve, sub-Saharan Africa and other remote, geographies, when you look at all of those types of things that are happening, from a digital enablement standpoint, that becomes the rails, right? That becomes the vehicle by which, we can take financial services to, the unbanked, the underbanked, the people that have been marginalized, within the financial system. It becomes the vehicle, the rails that we can do that with. And Moore's law tells you that as capability increases, cost goes down. So our ability to not only deliver those financial services to those folks but to do it at lower and lower cost is just awesome, right? To where we can see a world where 10 years from now we don't have this conversation about unbanked, non-banked, marginalized. We have reached billions of people, with the technology and with the services that they need to conduct their lives.
So I think one last question from my side, maybe after looking at this conversation, I can't resist myself. So Robin, you have seen the changes, and every 2 years, 3 years, 5 years, the things are changing. And do you think in at least for maybe, I don't know, maybe 5 years down the line, we go to a street shop and we can start exchanging a product either in form of a dollar or maybe a crypto as well?
Say the question again.
So my main point is that, do you think in next 5 years we can go to a street stall or maybe to a guy who's selling ice cream in a street vendor, accepting a dollar at the same time, maybe accepting crypto as well?
Absolutely. I think the future over the next 5 years, I don't have my crystal ball handy, but I think that where we end up with with everything we've talked about today in terms of whether it's digital currencies or embedded finance, is it's not going to surprise me if in 5 years you're paying for your ice cream cone, with your frequent flyer mileage, right? That the ubiquity of exchange, that it really will come down to a system of value exchange, and it's almost, it's in some ways it's a step forward, but also you think about the barter economy of eons ago, where I grew wheat and you had pigs, right? And we traded wheat for pigs.
Mhm.
I
Right.
think we're moving that in that direction, right? Where it's a issue of exchanging value and what's valuable to the merchant, what's valuable to the consumer, and there will be some homogenation of that, or some smoothness of that, that's very different than what we see today. We think in dollars, we think in rupees, we think in hard currency terms. And I think 5 to 10 years from now, that goes out. That will still be there, just like checks are still in the United States. But there will be a different value exchange in the future. Great.
Right. I think it's a circle of life where I think you have greatly exampled that the barter system, which was probably before the physical coins and the things were generated, barter system was there. Then it was gold coins, and then probably the current currency what we see has come. But we are moving to that portion of it as a circle of life, but in a more digital economy with the right exchange price. Beautifully said.
Yeah.
Robin, I really appreciate your time, and believe me, I don't knew that how time has flied by. We are almost in an hour's time. We have maybe extended it some time, but it was really nice talking with you. I'm soon that we will have few more sessions with you to understand how the future banking industry, the embedded finance, or maybe digital currencies is going to flow on, and we'll discuss and join soon. Thank you for your time. Have a great day ahead.
Thank you, Savik. Really appreciate it. For anybody that wants to contact us, mambu.com, and we'll be more than happy to help you out any way we can. Thanks very much.
Sure. Thank you. Thank you, guys.
Appreciate
Thank
it.
you. Have a great
Okay.
day. Bye bye.
Bye-bye.